highlight slide. I think we got through like the points, or two of the 3 bullet points, I think.
Okay. The report was submitted timely and met the October 31st deadline, and it's been approved by the LGC.
Okay.
All right. Available fund balance is defined by the local government commission as total fund balance less non-spendable items, less items restricted by state statute. The LGC uses this calculation to compare you to other units. Total fund balance for 2024 was $5.6 million. You had stabilization by state statute of $257,000. This gives you an available fund balance of $5.3 million. And this is an increase in available fund balance over the prior year by $188,000 due to overall increases in fund balance and a decrease in your stabilization. The available fund balance as a percent of expenditures for the general fund was, excuse me, 145.9%.
Yeah, I think, Elsa, I think you're using an old slide deck. It's 2023 versus 2022 on this slide that we're looking at.
Yeah.
Oh, mine. Let me check.
And the numbers
it says
don't match.
140 versus 140.
Yeah, I don't mean to interrupt, but the numbers not matching what you're covering.
Let me check what I sent Daniel, because what I see is 2023 and 2024.
No.
Let me see.
Well, Heather, you brought this up right off your.
Here, let's see. 22, hold on. I might have clicked on the wrong one.
It might be on our end.
I think it's on this
It could
end,
be on
because
us,
she's,
Okay, because the copy that I sent Daniel is the correct copy.
There it
okay,
is.
I think we got it.
I thought you were sharing screen, but I guess you
Oh,
wasn't.
no, she wasn't. I was flipping for it.
Okay,
Hold on, we're getting there.
Okay.
Okay,
there we go.
hold on, go back to this.
That's.
Yeah.
Yeah.
Fund
she-
balance
yeah, 'cause
position.
she said 2 and it was 4, yeah, okay.
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 She moved it out.
We're caught up now.
Okay,
Okay, I'm on slide 4. So the total fund balance was $5.6 million. You had stabilization by state statute of $257,000, and this gives you an available fund balance of $5.3 million, an increase of $188,000, and that is due to increases in your overall fund balance and a decrease in your stabilization. The next slide has available fund balance as a percent of expenditures for the general fund, and that's at 145.9% for 2024. So that means you can cover about 18 months worth of expenses with your fund balance. Next slide, total fund balance for the general fund was $5.6 million. This is an increase of about $8,200. It's a less than 1% increase, but revenues continue to exceed expenditures. Next slide, revenues for the year were $4.8 million, an increase of about $251,000 or 5%. Expenditures were $3.6 million, a decrease of $34,000 or less than 1%, and I will detail these further along in the presentation. Next slide, total top 3 revenues for the general fund. You had property taxes at 69%, permits and fees were 10%, other taxes and licenses 9%, and other revenue 12%. Property taxes were at $3.3 million, an increase of $525,000 or 19%. This is due to your increase in your property valuation.
well, it's also a tax increase, right? We went from 12 cents to 14 cents?
Yeah, not last year, this year, did it?
23, 24 did it? When was it effective?
It's the same tax rate. I'm sorry. I'm thinking about this.
Yeah, you gotta go back a
I
year.
gotta go back. You're
Yeah.
correct. You're correct.
Yeah, we had a tax increase, it would be part of that also.
No, it didn't go from 12 cents on. I can't remember, but it was at 20.
I have
We did a revaluation.
It was a revaluation.
I have 20 or 0.2 0.2 cent from 2023 and
It was-
0.14 for 2024.
Yeah, it was, also it was a reevaluation year, and the revenue
Yeah.
neutral rate would have been 12%, and we went to 14%. So
Right.
it was an increase over revenue neutral, but yeah, the cents per hundred was reevaluated.
Right.
Okay. Okay,
Okay, permits and fees were 506,000. This is about a 36% decrease, and this is due to parking revenues now being reported in the B Part Fund. Other taxes and licenses were at 437,000, a decrease of about 87,000 or 17% due to street assessments received in the prior year, not received in the current year. Top three expenditures for the general fund were general government at 30%, public safety 41%, transportation at 15%, and other expenditures 14%. Public safety expenditures were at 1.5 million, an increase of 156,000 or 11%, which is due to capital outlay and inspections and a first full year salary increases from pay study. General government was at 1.1 million, a decrease of about 7%, overall pretty comparable there. Transportation was at 537,000, a decrease of about 88,000 or 14% due to a larger street project in the prior year, and the town is now recording parking in the B Part Fund. Quick ratio for water and sewer fund. You had current assets at 1.1 million, current liabilities at 380,000. This gives you a quick ratio of 3.14, and the LGC would be concerned if it were less than 1. Performance indicator, you had unrestricted cash over total expenses, less depreciation, and adding in debt service principal. That calculation results at 17.56%. The LGC would be concerned if this were below 16%. And then the operating income performance for water and sewer, you had an operating loss of 272,000. You add back depreciation of 640,000 and back out debt service of 510,000. This gives you an operating income performance of 142,000 negative, and the LGC is concerned with this being a negative number. We'll discuss further on the next slide. With the performance indicator of concern, the water and sewer operating net loss, that should say net loss, I'll update that, must provide a letter to the LGC within 60 days of the audit presentation. And this is the same performance indicator that had popped out last year. So it should be, I can let Daniel speak more to that.
Yeah, it'll be the same exact letter as last year. The LGC already said that will be fine to change. We just got to change the numbers, and I'll bring that to the Board of Commissioners meeting.
And Daniel, what does the letter say, that the loss is due to debt service?
I can read it, it's pretty short. It reads, the calculation of operating net income loss excluding depreciation plus debt service principal does not include the town's capital charge and operating cash flow. The sewer capital charge is used to cover the debt service, and when it is included in this calculation, cash flow is more than sufficient. The capital charge received from the customers totaled, and these are the numbers from last year, 1.4 million, and capital charges paid totaled 988,000. The principal and interest charges for the water sewer fund totaled 505,000 in fiscal year 2023, when the capital charges received from customers less capital charges paid is factored into the performance indicator net. Net is a positive 223,000. This shows that cash flows from capital charge are sufficient to cover the capital charges to the county and the principal and interest charges for the water sewer fund.
Got it. Thank you. It's helpful.
And this concludes my presentation. Does anyone have any further questions?
What, it's not too late to change anything, is it?
Yes. The local
Well-
government commission's approved it.
No. The highlight slide that you, very beginning, can you add a point that I assume there were no internal control deficiencies found?
Correct.
So that, because we've had problems in the past, so this is your slide 2, if you could just add a bullet, no, whatever you want to say about internal controls, but no deficiencies, right?
Okay.
Okay. One other comment, and this would be not in the slides, but in your presentation. The audit results are great, but there's this huge difference between the audit results and the budget that was passed in that, for the year. And we've been spending some time trying to reconcile. We know that, part of it is we deferred expenses related to the pier, we deferred expenses related to Block Q development. We got grants to do the sewer system that weren't in there, but we're just trying to make sure we understand, or we can describe that pretty significant difference between the budget for the year and the audit results for the year. I think you've got a table, Exhibit D or something, that, is that where we do this, or is there something else that helps us to describe that?
Exhibit F should show the original and final budget, and we do procedures on the original budget to tie that back to your original budget ordinance. So where are you seeing variances?
Well, I think it's mostly B part, well, I mean, the original budget was actually to spend 3.3 million more than we brought in, to draw down fund balances and to borrow another $1 million. So that was that was the budget that was passed. And these results are nothing like that.
But they're only gonna
Let me
audit.
look at B
they're only
part.
gonna audit
B part,
this,
the budget that we present on B part is the final budget on Schedule 2.
Okay, what page is?
That's page 71.
Okay.
If you're looking for the original budget for B part, it's presented on page 21.
oh, there's variance.
Well, I think, yeah, no, this is, 71 is, so the budget, tell me if I'm interpreting this right, at the far left column, the budget called for overspending by 1.7 million, and the variance was a positive 2.775, is that, am I interpreting that right?
I'm looking at where,
I'm looking at the bottom
you're
line.
on page
revenues-
71?
Yeah, page 71, bottom line, revenues over, under expenditures.
Right.
So the budget had revenues under expenditures by 1.7 million. The actual, or the variance, was a positive 2.775. So I'm just trying to figure out, part of that's.
Are you looking, if you look at page, the next page, page 72,
Yes,
transfers in and appropriated fund balance are required to be reported in the other financing sources and uses section.
okay,
So that may be what's making up the variance there.
because we didn't do them.
Are you trying to tie it to the monthly budget actual posting?
No, I'm trying to tie the, budget ordinance to the audit results. And Tim tried that too. I mean, he came close. I think we lost Elsa.
Somebody called, trying to call in.
Oh, okay. Elsa, you there?
I'm here.
I'm sorry. So yeah, trying to describe the difference between the budget ordinance that was passed and the numbers in the audit, because they're dramatically different. I mean, just the budget, you know, like I said, we know that the peer and block Q and the grants, but that doesn't help with all of it.
The budget column in the budget or in the audit matches the budget ordinance passed.
Right,
So you're just talking about the variance over under
right.
column.
That wouldn't be an audit requirement.
No, I know we're gonna get questions on this, so I'm just trying to get a response to the questions that I'm anticipating.
I'm pulling up the original budget ordinance right now just to make sure. But I know we tested that.
Yeah, if I may, I don't think the question is about testing, right? I think the question is about messaging. And how do we, you know, and Tom did a
Explain
fair
it.
job explaining to the public things were put off, so stuff that was budgeted and didn't get spent is showing up as a variance and we're underspent in the budget. I don't know that the auditor is allowed to make a statement on that. I think the finance director would have to make a statement on that.
But that's what I was trying to understand. Are
Yeah.
you asking about, if you're asking about why there was a variance,
Sure. Yeah, that can't be part of the audit report. That would have to be part of your report, Daniel, correct?
I mean,
Right.
yeah, that's just a result of operations, not really.
Right. Yeah, it's just, I think we're trying to anticipate,
Yeah, no, I know exactly what, everybody's gonna say, hey, the budget was doom and gloom, and this is great,
that's great.
so. And it's happened last year too, so, you know, that's the question or the challenge or whatever you wanna say is gonna come is, you know, things were never doom and gloom, but
No.
that's not what the budget ordinance says. So that's kind of the situation, and I agree, I think, Daniel, it has to do with, you know, our change in what we actually spent money on versus what was in the budget ordinance. I don't think it's an auditor
Problem.
problem.
Yeah.
And I just wanna find the
part
right
is-
pages in the
It's
audit,
pretty simple,
which-
it's peer and block Q.
Yeah.
Those
Okay,
are the big items.
okay. So I just wanna find, so 71, 72 are the pages that deal with the B part.
Here's the question I have. If we look at the budget ordinance, does somebody have the budget ordinance? If we look at the budget ordinance for the B part fund, does it have revenues under expenditures for the 2024 budget of $1.714 million?
Yes, and that's what's in the audit,
Okay. And they've reconciled that for us right here.
yes.
And what someone needs to understand are what are all of these reconciling items, right? The big ones anyway, the 1.4 for the NCDWR grant, the 1.4 down here for operating, it looks like operating expenditures is under budget by $1.5 million almost. Lockwood Folly dredging and beach nourishment is 873. So the big one, somebody needs the piers, $1 million. Someone needs to be able to explain that. Right? I mean, they've reconciled it.
We're gonna be
They've
asked
reconciled
about it, so yeah, it would be good to be able to explain it.
Yeah.
Well, I mean, I think it's a simple explanation. I mean, if you followed anything that the board has been doing, a lot of stuff has been put on hold, so it's a slow spend. The
Yeah,
end.
Mary Jo, my question would be, tell me why there's a reconciling item for 1.4 million on the North Carolina DWR grant.
Right.
Tell me why there's operating expenditures are underspent by 1.5 million almost. Why is Lockwood Folly dredging and
Things
Birchwood
that
underspent by, I think that would be the questions I would have as part of the general public.
Okay.
Right,
And that would explain why
right.
why,
Projects were on hold.
yeah, what projects were they? And how much were they on hold? Are we doing them later? Are we doing them now? What are we doing with
Oh,
them?
that's a different question for the Board of Commissioners and not for the.
I know, but
Well,
somebody
there's-
needs to understand, somebody needs to understand the finances, the story the finances tell, so that the Board of Commissioners can answer those questions.
And to
Yeah.
follow that up, again,
Uh,
why are we
if-
even dealing with Lockwood Folly?
But if I may.
That's for the Board of Commissioners,
Okay.
but
The Board of Commissioners, their job is to explain why they didn't spend, it's not our job.
well, someone needs to understand what this 1.4 is. I can't tell you the North Carolina DWR grant. I'm sure there's someone who can. Who is that and who's going to explain it? Why are operating expenditures underspent by 1.487 million? There's an explanation for it. I don't have it.
Right.
Well,
Or do we need it for our role here?
If we could ask it, I would like to have it.
Right, but is that our role or is that the Board of Commissioners' role? That's my challenge.
The NCDWR grant, I believe, Elsa, isn't that the grant revenue that we, or a portion of it, the grant revenue that we had to put into deferred grant revenue?
Yeah, you put it in, it goes into advance from grantors. Let me find that on the statement.
I mean, there's no conspiracy, these are easily answered questions, but I'm not sure that's for if we have a clean audit, the numbers are lining up, the Board of Commissioners has to explain its policy decisions that have resulted in an underspend. That is not the job of the audit committee.
We are tasked with supporting the financial reporting. You know, to me, this gets to financial
Yeah,
reporting,
that's
which is the
different.
next statement.
Yeah, that's a different issue.
Um,
But I think that as far as the audit goes, nothing like that would show up in a standard audit, right?
Well, it's all on this page.
Well, I know, but I'm just saying the detail to that level, that comes out in a different space. If it comes out in a financial report, that's different.
Okay.
I'm just pointing out, we're holding an auditor for a thing that she can't.
Oh, I'm not asking
doing.
her to explain it.
Yeah,
I'm not,
yeah,
no, I'm not asking her to explain it.
Yeah.
I'm just saying
Okay.
someone needs to be able to explain it.
yeah.
Okay. So, yeah, and I think, you know, our next agenda is to talk about financial reporting. and-
Which is
and
different,
dashboards.
yeah.
Which, well, okay. So I'm good on the audit,
Yeah, it's-
what Elsa has presented. I don't know if anybody else.
I just have one question. I think there's some significant adjustments to go from, do we make all the depreciation adjustments, pension adjustments, and those types of things, Daniel, before we hand it over to the auditors? Or do the auditors do some of the computations for us?
The auditors calculate the depreciation for us.
That's nice.
Other-
We provide a non-audit service of maintaining the capital assets, and so we post the depreciation, and we do the reclassifying journal entries. All the adjusting entries are provided by client.
So the accrual adjustments and whatnot are provided by client?
Yeah, the accrual adjustments are provided by client. The reclassifying journal entries to adjust pension and things like that, and capital assets are done by us.
Okay, thank you.
Anybody else?
I have a couple of questions to ask
Okay.
you later.
Okay. Okay, I think we're good. Elsa, thank you very much. And,
Thank you. I'll get that refreshed copy back to you early next week.
Okay.
Thank you.
Thank
Thank you. Bye-bye.
Thanks.
All right, now I think the thing you want to talk about.
Okay, so yeah, next topic is the monthly financial reports. And yeah, they're related because
Right,
to me, you know, if we go through the year and we defer expense or we don't, you know, where do we stand? Where are we going? Do we think we've got money? Because, you know, if I look back at, you know, the way things turned out, it's like, did we really need to raise taxes? You know, should we have funded some other things because we have the money?
yeah.
So to me, the financial reports going month to month is a dashboard that tells us where we're at, where we're going, where we're likely to end up if things go according to the same plan. And we can make decisions about on the, you know, as the year unfolds. It just seems too much like we don't know until October where we stood and it's a big surprise every year. It's always a pleasant surprise, which is great, but it's still, it would be
Until
nice
it's
to
not.
know in advance so that, maybe we can spend some more money in certain areas, maybe, because we kept the same tax increase, I've got a question. If we're doing so great, why did we raise taxes?
Do you have a monthly budget?
Daniel's on the phone.
He does.
I don't,
Scenario.
No, we don't budget
Scenario
by,
budget.
by month.
Therein lies, if you don't budget by month, it's pretty hard to,
Yeah, but by ordinance, it's an annual budget. By law, it's an annual budget.
but for management purposes, can you not have you can't have a monthly budget for management purposes?
The annual ordinance attenuated on a regular basis is sufficient for what I need.
The people aren't saying that.
But you can,
Excuse me, I didn't hear you. I'm sorry.
yeah, you want the floor?
The people aren't seeing that. The people.
It's
pay-
posted every month, Mike.
But they don't understand, that's the purpose of this conversation is, we don't understand the budget, I'm not, people don't understand the budget that's passed out at the meetings.
right.
Can-
Yeah, I have a problem understanding where we stand based on the reports that are coming out, because,
For example,
I can't
just a nitnoid. Several vehicles are driven personally from work to home and back, year-round. They aren't included in individuals' compensation. They aren't taxed. They aren't depreciated. The gasoline isn't accounted for. That kind of stuff we're not seeing. And where I live, those are the kind of questions that are being asked. Where does all this stuff go?
The vehicles are depreciated and
Yeah.
all the gases and gasable and tire lines.
I'm
and
sure
the
they are, but
different,
when it comes to your,
departments.
If I may, you can't count it as a benefit if people are on call 24 hours a day. It's not a benefit then. So it's,
well, how many
and,
people are on
and,
call 24
and
hours
let's,
a day?
if I may,
hold on, yeah, 'cause this is kind of
yeah,
off
this
topic.
is,
This
oh yeah,
about
let's,
the
yeah, let's talk,
Transactions.
Right.
yeah.
I'm,
I
we've
agree.
been spending time, I think since January, on the financial reports to get them so that
Right.
they support decision-making and they give us a good feel for where we are as the year unfolds. So I know there've been a couple iterations, I've passed around some,
Yeah.
it's gonna take some work, it's gonna take some time, we're not gonna do it today, but I don't think we're there yet, is kind of my assessment.
Can I ask a question? So I think the question is there an ability to show burn rate? And I don't know the answer to that, right? Like, is there an ability to say, hey, we're slow spend, here's some options for us for this year, here's why we're slow spend, or if we're fast spend on something, is there an ability to show that on a monthly basis? Basically, you'd have to break the budget out, right, by month.
View's not worth the climb on it, on that effort, on that type of effort.
It
I
is
mean,
not.
Now, what you're
I hear
calling
ya.
if what you're calling a burn rate, and what I call a burn rate,
Yeah.
may be two different things, but basically, how much cash you got, what's
Yeah,
your
right.
budget, and how fast you go through
Yeah,
it.
right.
Yeah, and see,
It's
all
a huge
of
effort.
these,
Yeah.
all of the, if we were in Vanilla City, USA.
Gotcha.
Where everything.
No, it wouldn't be
was
that,
this
because it's
way.
going to be this way. I know that.
And it's
Yeah.
a 23 chromosome,
Right.
double cyclic, cycle on.
Because revenue's coming in at different times.
And it's not
Yeah.
just the revenues, it's
The
the
spend.
corresponding expenses that go with that do that. So all of those things have that type
Tom-
of effect to it. Most of them do, when I say all of them.
Well, I think we know that Bee Park comes in during peak tourist season, ad valorem taxes come in at the end of the year. So like right now, tourist season's kind of wrapped up. Is Bee Park revenue that's come in where it should be compared to last year, compared to projections, because
It's
we
like it's
basically
over.
only have May and June next year to get any significant,
Well-
and even that
Well, I
time,
think
we
the
probably don't
report
get it.
captures that through the first page of it.
I'm sorry, what?
The occupancy tax. The report, the finance report captures that on the first page,
Yeah.
the occupancy
So,
tax.
My question is also, is there not an assumption by the board that if you put off a project for which you budgeted, that you're going to be slow spend? I mean, if you didn't do it, you're
You
going to
would
have.
assume so, but
you-
you'd want to see it show up, so, you know, I mean.
Yeah, I think what I hear you saying, Tom, is that you don't feel like you have adequate financial information to fulfill your oversight role.
That's correct. I feel we're flying blind.
Yeah, I understand that.
'Cause-
I understand it. I don't disagree, by the way, and once again, I mean, there are tools to use that you could do something like this, I think fairly easily. You set up an AI prompt in the right way, you feed it the right information, it'll do a budget, it'll do a monthly budget for you in 20 seconds.
Yeah. I mean,
But you gotta
even-
be able to use those tools in order to come up with a monthly budget. I'd be interested in knowing whether the software we use allows for a monthly budgeting process or not.
I mean, the software will split out a monthly spend, and it'll say like where you should be if you divided every number by 12.
Right,
Yeah.
But that's not how it works though,
Yeah.
for
right.
spending or revenue.
But Daniel, is there an
So-
opportunity to tell that software, hey, we don't collect B part all year round, well, we collect B part all around, but the majority of our B part's collected during these periods, and then it trails off during this period, and there's no way to feed that information into the system to do and you're not gonna have a perfect monthly budget. It's gonna be perfected over time, and it's gonna get better over time.
I mean,
But
to me, for starters, we can start with last year's monthly actuals
you could,
and see how it varies.
Yeah.
This year's actuals for that month.
Well,
and stuff.
in the bar chart that Daniel worked on, it does compare the same period year over year on the 4 items y'all were worried about at the last meeting. He did it for the board, and it showed sort of year over year what it looks like. It might not be enough, but it, I think, is a start. But it did show that sort of year over year. Let me look at it quickly. I had to.
It's a, there it is. It's the one in the packet, right? So it'll show, compared to last year,
Yeah,
it's
so
a
you-
year-to-date,
Yeah, it gives you year to date, so you can compare the.
where you are, it's a
At the
snapshot.
time, yeah, it's a snapshot. And that, as David points out, might be all you get just because of the times you spend things. You know, there's certain times of year you do certain things, but,
I mean, I've got an Excel sheet that I've been passing around, I think you've
Yeah.
all seen it. I mean, to me, it boils down to entering, once it gets pre-populated with last year's data, you're just gonna enter one number per month, and then the report will spit out. I mean, it's not time-consuming,
Well, I mean, that's what I'm doing with this report right here too.
Yes, I agree, but it doesn't help looking forward in terms of, if the rest of the year goes exactly like it did last year, which is how we're assuming it will, then what does that mean?
here's one thing you could do. You could put in last year's spreadsheet by month or whatever it is,
Yep,
last year,
yep.
and you wouldn't put any confidential or personal or any information into any of this, but you could put in last year's spreadsheet in terms of the monthly spend or the monthly,
Yep.
results.
Yep,
You put in the budget for this year,
yep,
and you say, based on that spreadsheet,
yep,
spread the expenses, spread the income the same way. And then modify it accordingly. You're not gonna have, here is gonna be different, block Q is gonna be different, you have to modify that, but that wouldn't be that hard to do, to come up with a monthly budget.
Well, we're not really, we're not like spreading income and expenses really based off of the indicator. We're spending based off of as needed basis throughout the year.
yeah.
yeah, we're reporting actual transactions, actual
Actual
spending,
results.
actual,
Right.
and
I
on a monthly
think I'm
basis,
just,
but
I'm
we're,
confused on what you mean by, if we're not collecting the revenue we were collecting last year, that doesn't mean Public Works can not do their job. because we still got to pay them, we still got to pay for gas, still got to pay for supplies, to keep the sewer, water and sewer running. I'm confused on what the goal is.
The goal is to understand where we are as the year unfolds, how that compares to last year, and where we stand, you know, where we likely will end up if things go either according to plan or according to last year or whatever. The decisions that need to be made are, do we have, you know, something new comes up, we want to fund something, what would that do to our year-end finances? Can we do that, or is that going to have a problem? You know, once again, and I think the reason we're having this conversation is we've got an audit that basically says we had a lot of money we could have spent,
Right.
and we didn't,
But
because we didn't know we were going to
monthly
have it.
budget actual showed that as well.
Which one? The,
Every one of them
The
throughout
month.
the year, because the
Yeah.
$1 million pier line and the $700,000 block Q line were both unspent.
right, but my point is, that's buried on a 42-page report. I'd like to get it in a graphical dashboard that you can just look at and draw those conclusions versus digging it out of 42 pages of numbers. Okay?
I'm having a hard time. I'm hearing, Tom, that you need some proactive advice, but I also am hearing that the board approves a budget at the beginning of the year. There should be a presumption that if you don't spend, you're going to underspend. I mean, that's just what it is. Now, when the staff make recommendations to spend, certainly they should come armed with information that you can spend and show it to you, right? But I'm just,
That,
yeah,
I agree.
yeah, and so that's part of it, but, and I'm assuming they do. I apologize, I don't watch your meetings. But I'm assuming they give that to you, but I just don't know when the board approves a budget and then sometime during the year decides they're not going to expend, there's a presumption you have those dollars, unless you specifically pulled them to pay for something else, which would be part of your motion, right? Like if you had to reallocate funds, I'm asking a question now. So my question is, it may be for David, if funds are reallocated from another line item, does that go in the motion when they move it at the board meeting?
That's a budget amendment,
I see.
and that has to be presented at the board meeting.
Okay,
If it's increasing or lowering the budget, it's a budget amendment.
if it's changing anything that they already approved, then it's coming through as a budget
They
amendment,
don't know
correct?
where it comes from.
If the fund total changes, the Board of Commissioners has to approve
Got it.
the change as an amendment.
Got it.
Yeah.
Yeah, so that's happening. And then when I'm hearing Tom say
It's
that's
very
hard.
infrequently happening, by the way.
Yeah, right, because you're
It doesn't
underspending
happen.
everything. But then what I'm hearing Tom say is it's hard to keep track of and they lose sight of that. I mean, I'm hearing,
Well,
let's
the-
be,
the Pier's a good example, because I
Yeah.
think there was 2.1 million in the budget, you know, the bids came in at 4 million or something like that, so it didn't happen.
right,
That 2.1 stayed in the budget.
right, you didn't do anything with it. Yeah, it
Right,
just sat
so-
there.
So,
Yeah.
but it under Pier in the budget, you know, so the variance
Yeah.
was, you
A
know,
lot.
2.1.
Correct, yeah,
So,
right.
you know,
So, and I don't, forgive me, because the structure here is a little different for me, but my question for Daniel is, I don't know if on your report, Daniel, you want to highlight spending actions that are not being taken, so that people can see we're not spending on the pier, so that funding is sitting there? Like, you know how you do your summary?
Yeah, I mean, I can do that.
And then that way it's in front, and they, you know, 3 months from the decision, they're like, oh yeah, we still have this money sitting here, we need to think about what we're gonna do with that. I mean, I know that seems counterintuitive in your daily work, but citizen volunteers might not be tracking, especially in light of the other decisions that get made, but perhaps, highlighting that so that the underspend is out there. And same with overspend. I mean, you don't have any right now, so congrats on that, but, but if there was overspend in a line item highlighting that, would that help, Tom?
Well, we hope that we don't have any overspends because that's a violation of the statute.
Right.
And
Yeah, I can't sign a check for a.
Yeah, can't,
Right.
can't, hopefully we would have taken care of those
But if
with
you
a budget
moved it-
amendment
yeah,
prior to.
but
yeah.
even if you moved it, like highlighting,
Right.
recall we moved funds for this, I don't know what that is, but, recall that we moved funds for this item, so that line is done, if it is done, but,
I assume there are some significant expenses that are not even throughout the year. Is that true? Other than capital projects. Put capital projects to the side. Are there significant expenses that are uneven or lumpy through the year?
I mean, any big equipment purchases or truck purchases,
Yeah.
those aren't scheduled for a certain time or
Yeah.
anything like that. Especially in today's vehicle market, which is still a little tough sometimes.
So outside of that, is everything else pretty much?
Utilities
utilities.
go up.
Yeah, I would assume so in the summer, yeah.
So if you're mid-year and you're a commissioner, how do you understand whether we're good or bad in respect to, where we are with respect to those items?
Are you asking me as a commissioner?
No, how would the commissioners understand? How would they know that
To,
we're gonna?
to me,
Because
to me, they pass the budget, so they have that money to spend. We've got plenty of, even if in revenues are tracking good as of now. So unless something just absolutely catastrophic happens, then revenues are going to track well enough to where they should
Got it.
cover all expenditures. So, you can plan on expending everything that was budgeted. If all projects go through, unless there's a timing issue.
We talking about this year's
construction
budget or
window
last year's
something.
budget, Daniel?
Any of them.
Well, last year, to me, it was the issue because, the budget, as I said, had, additional borrowing and drawing down balances, and the actuals were totally, balances went up, we didn't borrow. So at some point in that year, we should have known in advance so that we could have taken action to maybe make some more investments or do something. But we didn't find out till October, now it's too late, the year's.
So help me understand it this way. If we move to page 71 again, the expenditures line, salary and employee benefits in the B part fund. They're underspent by $1.5 million. When did the commissioners learn that? Upon the audit?
Where were you at?
I'm on
71?
page 71 again.
Salaries?
Where this
Funding?
reconcile, you got the budget along the left-hand side.
Yep.
The reconciliation's all done here at the end of the
Yep.
year. Here's the actual.
Yep.
Move down to salaries and employee benefits. The variance is 1.487 million underspent. And
That's
I think,
operating
Daniel,
expenditures.
just a minute, let me,
Yep, okay, go ahead.
yeah, operating expenses. So you may have made it, if you knew you were gonna be under budget, by operating it's operating expenses, yeah. If you're gonna be under budget by $1.5 million, you might have made a different decision with respect to those line items. Not to say that you would, and then not
Yep.
second
Well,
guessing anybody.
That was the pier and block Q.
Oh,
And if I may, I am concerned that I think what I'm hearing is more proactive conversation from the staff about the consequences for decisions, especially downstream, one. Two, I do think we need to be cautious because we do expect our elected officials to be tracking this stuff at all levels of our government. So, it is incumbent, if there's not an understanding, to get one, and if you put something on hold, to know that you're not spending, you're not spending, that's a consequence. So yes, we want staff to do this, but also, when people make decisions, they have homework to do, right? So I'm just putting that out there, and I think when staff tell you you're underspending, trust it, they're giving you the backup. So, I mean, I think there's a balance here to be found, because and I don't know the answer to it, because I think, and there's also diminishing, there's an opportunity cost to having Daniel continue to to show these numbers in 8 different ways, and I'm trying to figure out, maybe it's just part of his report. We're underspending in these areas, and we might need a budget amendment in these areas, right? Whatever that is. So maybe it looks like that as opposed to a chart. I'm not sure a chart gets you where you want to go, because of the cyclical nature of some of the revenue and expenditures, but he can certainly give you a public report on here are the things to be concerned about. I don't know.
I'd like to finish my thoughts from,
Oh, sorry.
from this. I think that, based on what I can see, the staff nails the operating budget. The revenue, the expenditures, you nail the operating. There's so many contingencies in the capital budget that's what's giving rise to these,
Right.
to these big variances, right? And if there's some way to track the capital budgets and progress on the capital budgets, or projects deferred, or what's in the budget, and what now is being, and some of this stuff is not underspent necessarily, you're just shifting years. Some of it's just a timing difference. At some point in time, you're gonna spend that for the period. You're gonna spend it for block
Right.
Q or whatever.
Right.
And if there's some way to better understand that, I think it might really help, Tom, in terms of where you stand during the year. And you won't be surprised by these big variances, because people will have told you throughout the year that, hey, Tom, we're gonna be 1.5 under budget because we had under budget on this, because we had budgeted for the pier. Now, they would assume that you should know that, but you don't, I mean, unless it's pointed out to you on a month-to-month basis, you don't always remember it, you're busy doing other things. So if there's, I don't know if there's some
That's a good idea.
third way here
Yeah.
where you're tracking these capital projects, because you have a whole list of capital projects anyway that you might wanna do.
Right.
And maybe you move one out, or you move one in, you might make a different decision. And then maybe you have a discussion about the operating budget, and that's fairly standard. There's fairly few variances in the operating budget. I mean,
Right.
anything I've looked at in the operating budget looks like it's pretty well nailed to me, And it's the change in facts, or the change in circumstances with respect to the capital projects that are giving rise to the confusion and these large variances. I say confusion on, my part, your part, whoever
Yeah.
doesn't understand.
No, I absolutely agree. Now, Daniel and David, we're doing a project ordinance for the sewer station. It's not in the budget ordinance, it's gonna be in a separate project ordinance?
They're all budget ordinances, but that's actually a capital project ordinance.
Okay, because
It'll be set up separate, kind of like the FEMA project for each.
Yeah.
yeah, FEMA was that way, but I think that might address the situation that Tim's alluding to is, if it's these swings in big capital, but, we're not doing it this year, it got pushed to next year, didn't go away, but, that's my understanding of the advantage of a capital project budget is it's not tied to any fiscal year, it's tied to the project. And, it's not gonna necessarily impact, or if it does impact the operating budget, you know why, that this project didn't spend in the timing that we thought it was gonna spend.
Right.
Is that we've got the ability to do that, right? We just have to say for the pier, we want to set up a project budget, capital project budget.
Yeah, that, you could set up a capital project for any capital project.
Similar to FEMA, similar to the sewer station, those are required, right? Because we're getting grants, that's why the
Yeah.
federal money coming in.
Separate accounting.
That's correct.
Okay. Okay, well, we're not gonna solve it today. I would like to make some progress, move the ball a little bit.
You say you're not going to solve it today, but it sounds like a simple thing to sort of pull out a list of the capital projects, yeah? Or is that a hard thing or an easy thing? I'm asking the staff. Is that hard?
Daniel's the one that's gonna have to pull
I
them
know,
out.
that's why I'm like, Daniel, is that a
And
hard?
depends on how big you're
Yeah.
gonna define capital as.
Right, right. Is it a,
Yeah,
is
I mean,
it
we've got the capital,
just a snap?
what's it called? It's got all the capital projects
The SIP.
that's attached
Yeah.
to the ordinance.
The SIP,
Okay.
but it's, I don't know how to describe it. It's a wish list in some ways. I mean, it's not
Okay.
necessarily accepted, funded capital projects like the sewer station
But
is.
we want to talk about funded ones that would show up in an audit,
Ones that are
right?
gonna be in our financial, that would be in our budget.
Yeah.
No,
And
I-
really, this would be,
I think what you're talking about is the capital plan, as,
Okay.
that is an attachment to the manager's message, and that's not, that's the wish list, if you would.
But the 1 year is
It's not
binding,
the,
right?
I'm sorry.
the first year is actual capital, but then future years are,
The first year in the capital plan is included in the budget ordinance,
yeah.
and, I mean, but what you're talking about is the capital plan, I think,
Yeah.
except for the first year.
Well, actually, it
What-
started
Which
talking
is
about
not-
this
which
also
is
with-
not
with-
an
With the capital
ordinance.
project, the ones that you budget for that year, if you don't execute one of them, like with the pier last year, we didn't execute the pier, but it wouldn't be feasible to say, okay, we're not executing the pier, but let's build a water tower, because it's gonna take more time than that kind of split decision to be able to do that. So, I mean, it's not feasible to reallocate money for the capital project within a budget year.
What,
There's too much planning that goes into it.
Well, and that's the advantage of doing a capital budget ordinance is you're not tied to a year. I mean,
what if you said any capital project that over the life of the project has the potential to spend more than X dollars, $1 million? I'm picking a number out of the air, I have no clue. And you track it. Because that's going to give you a material swing, and it could give you a material, something under that's probably not going to give you a material swing in the financials, or such a big swing that you might make a different financial decision.
yeah, I mean, I think, we're veering a little bit off of, we're getting into accounting for capital projects. What I was really focused on is the monthly report, getting a feel for, so if this capital project gets deferred and we're not spending it, I'd like to see that in the next month, that boom, we've got money, available. We're gonna be tracking way low for the rest of the year because we're not gonna have that.
Right.
So, I'm still back on monthly financial reports that kind of give me a feel
So-
for where we are this month compared to last year. last
So
month.
you're asking for, I think what you're asking for is a.
I'm not always in the loop on what the board is doing. Like for Block Q, it went to the board, then it went to the Parks and Rec board, and then it went back to the board. And I mean, I don't, there's no way for me to tell what every advisory board's going to decide on it.
Right, we had the money in the budget, and after it went through all that stuff, nothing got spent, so that money basically fell to the fund balance, but it stayed in the budget. We didn't do a budget amendment to take it out of the budget and reallocate it anywhere.
So Tom, let me ask if I'm understanding this correctly. I think what you're asking for is a supplemental schedule that outlines the capital projects that are in the budget for the year and where we stand on those capital budgets and where we expect to come out, if we're still on target or if we're below target or above target. And, because the operating budget is going to be, they nail the operating budget.
Well, but the issue is a lot of that's in the general fund now, so, the general fund, the B part, those are the two big ones. And probably mostly in B part, that's where pier, that's where block Q were. So B part expenditures, I don't, you know, I don't know if.
That's gonna give you a heads up. That's gonna
Yeah.
give you a heads up if you have, you're gonna have a significant variance during the year, material variance during the
Yeah.
year, because it's gonna be in the capital projects. And if you keep an eye on the capital projects, then you shouldn't have a surprise at the end of the year
Right.
in terms of a significant variance.
But
The rest of the
projects
expenses,
are buried in the B part budget with all the other.
and that's
stuff.
why you want a supplementary schedule. You want a separate schedule put together on a monthly basis that outlines the project for the year, or the expenditure for the year, where we are on the expenditures, and if we expect by the end of the year to fully spend that or not fully spend it. If not fully spend it, how much do we think we might be under?
Right, yes.
I think
The
that's what you're asking.
expectation to spend or not to spend is where I run into the issue though. Because like I say, it's not my call whether to spend or not spend, that's the board's call.
Right, you just account for what the dollars are, transactions are, so if it never gets spent, it never shows up in your report, because, I mean, it's in the budget, but it just never shows up in the actuals, for that item.
I think I know what you're saying.
So, I mean, would you like me to just add a section to the report that says these are the no spend line items year to date?
Ooh,
I don't know that, I mean,
that's interesting.
And then you can ask questions around it.
well, we know, right, we made the decision not to spend it, so I think we know those, it's just,
Well, that's what the variance this year was though, like,
yep, yep, yep.
So I think, yeah. You know what they are, you're just not tracking it.
It's not showing up anywhere in my mind. I mean, it's showing up as a budget, you know, this is the report that's up, right? So this is what we've got. So you would have basically, you know, a budget amount in the column here. There wouldn't be any year-to-date, there wouldn't be any remaining balance, you know, it would be a variance. So, I mean, this is the report right now, so,
so you're saying you'd rather it be split out like in the audit report?
no.
Where
I would
it's,
rather have it, I'd rather have, you know, I like the, what you've got for the month compared to last year. I mean, I like, you know, month by month, instead of just a snapshot, you know, for each month, how to, because maybe this month is low, but it's gonna be high
The
next month.
previous report I had was month by month, and the board instructed me that year to date would be more useful.
Bring another rock. That's exactly what y'all
Yeah, okay.
did. Yeah, that's exactly what you did.
I'll bring a rock,
Yeah, I
it'll
mean,
be the rock
yeah,
I like, if you guys are
I
good
mean,
with
just
that.
say, right. But that's what you had the last time.
Okay.
Okay, all right. Are you willing to meet with me, Daniel? I can kind of show you what I'm thinking, and we can give it a fly and see if it, you know, because I think.
Yeah, I mean,
it's this
I'm willing to
one
give
here.
them another
You
shot.
guys have seen this.
I think I need a little more direction on what is wanted. So,
Okay.
Yeah,
I'd like to meet with you.
okay.
I think you need to get clear on exactly what it is that you're trying to accomplish.
Right, what's the goal?
Dashboard,
For you or for the public?
for the BOC to know where we're at,
Okay,
so we're not flying blind.
well, I'd be careful saying that because you get substantive reports, but
Then-
they're hard to interpret, and I understand that. I'm not, I got that, but I'm just saying, I'd be careful to say it that way, but,
Is it possible to present, and I don't know government accounting all that well, but is it possible to present the financials in a way that comes down to operating revenue, and then below it has a capital budget below it?
That would be the system.
Because it's all kind of buried together right now in the monthly reports, isn't it?
By fund, yeah.
Funded by accounts within the fund.
Yeah, and I'm talking about this accounting by fund. So is the capital project broken out separate by fund? at the bottom of the report, it comes down to operating income and then a capital.
I would say no, it's a line item up here. I mean, the pier was like in the middle of the stack there.
They can be any place within there.
I
It's,
think-
I know what you're thinking of, a subset, but that's not the way that it profiles in the system.
I think it may be, if you can change the reporting alone may get you to where you want to be if you can just modify a report. If you come down to operating revenue, operating income,
Yeah.
that's going to be month to month. They're going to nail that month to month. And then you come down to a capital project, a capital section, and that outlines all the capital projects that are in that budget. And then you have a section that are transfers in or transfers out at the very bottom. That may give you, that may give you what you need. I don't know.
Can you scroll up to,
I was going, do you want to look at B part? What do you want to look at?
well, let's look at B part revenue.
Just remember, Daniel can't see this.
I know, but he knows these reports.
Are you looking at the monthly?
We're looking at the monthly report.
Or
before
the
you-
posting to the website?
The
The
month,
one we just posted
Okay.
to the website.
yeah,
So B part revenue, what I'm asking for is basically just the budget amount, 6.2 million, and then for the, see, this month, what is it that this month, how does this month compare to last month? So this, what is this showing? This is showing year-to-date, July 1st to end of, okay. So this is year-to-date, now, I was thinking month to month. Every month, the current period would be November, October. So as of end of October, how much BPAR revenue came in October this year compared to October last year? So basically, just one number off of this report, which would be the total revenue, not getting into the accommodation taxes versus parking versus other stuff. Just how is our BPAR revenue tracking month by month? And how does that compare to last year's month by month? And
Well, that sounds exactly like the previous report was.
Yeah.
it's exactly like what?
previous.
The
Well,
previous
I mean, yeah,
report.
you're taking that and graphing it, right? I mean, that's basically, you're taking that
Uh-huh.
budget and just making a graph, yeah. How do you project where we're gonna end up at the end of the year by that, though? That's kinda where I'm concerned. I mean, here's where we are right now.
I mean, right now, looking at last month's report, I mean, for B part, overall, the revenue was almost exactly, it was 328 compared to 330. So, and then occupancy tax and parking are tracking slightly above. So, I mean, I would say that will end up slightly above our projection.
Well, parking's a good example, because last year wasn't year-round, so it went to zero after October or whatever. So this year, I would be very interested in knowing, parking revenue for November, December, January, off-season, because that should be, additional revenue that we didn't have last year. So that's why I inclined month by month. And same thing, like I said, for, like ad valorem taxes, all that's supposed to come in December, January, February, maybe timeframe. So those are the critical months.
Tom, might the confusion come in that you want it on a month-to-month for the operating budget, but you want it on a year-to-date basis for the capital budget? Month-to-month in the capital budget's meaningless, I assume.
No, I agree with that. Because right now, yeah, if it's in the capital budget for the year, it's gonna show up somewhere in a line item. But you don't really know, I mean, if it hit or didn't hit based on what's the year-to-date amount for that item. Is there anything, or, so, unless you know what month it's gonna hit in. Well, I still would like to do month to month instead of year to date, just to see the months and to see it play out. And like I said, I can't believe it's more than taking the number, punching the number in and seeing where they're plot out. It's just that every month you add another number.
Yeah, I mean, coming up with that report's not a problem.
No, I mean, we got it. It's just putting the numbers in an Excel spreadsheet.
Uh-huh.
I mean, that would be my approach, and then if it gets bested by somebody that's got something better, let's think about that. You know, but, and like I said, Daniel, I think if we can talk, I'll just, you know, you probably have the spreadsheet, don't you? I think I sent it to everybody. So it's really
I have
just
it.
populating one
I don't know if you sent it to all of us, but,
cell. I thought it did, but,
Yeah.
okay.
You did.
yeah.
So, all right, if you're all right, let's meet, I'll talk through it, let's give it a shot, and then we can throw stones at it and come up with something better, but,
Yeah, we can do that sometime next week, if that works for you.
okay.
Or just
Okay.
email me and we'll figure it out.
Okay, everybody all right with that?
Yeah.
Okay. All right, so we'll move on. Number 7, if we want to change auditors or if we want to go out to bid for a new audit, now would be the time to start. Last year, you know, when this board came on, it was already shipped and sailed, basically. So it's always a good idea to change auditors after some period of time. It's best practice. I think this is the 5th audit. They were a 3-year contract. They gave 3-year pricing. We're in the 2nd of those 3 years, so this is their 5th year doing the audit. They gave us the price for next year. I'll just open it up.
But
for
they
discussion.
priced it with the understanding that they'd have a contract for 3
Yes,
years.
they gave us a 3-year arrangement with 3 years of pricing.
And we're in the 2nd year of that
We're
third.
the second, this is the 2nd year. So right now, we're talking about
Got one more.
the 24-25 audit, and they gave us a price. And if we don't want to change, we just go ahead and don't go out to bid. If we want to change, we go out to bid. We may end up still with them.
Well, oftentimes when they do that, they absorb some of the stuff up front and make it on the back end. So you might, I mean, to be fair to them, having been in an audit firm myself, to be fair to them, it seems like we ought to go with the 3rd year with them. And then consider a change after that, or at least go out for proposals after that to see what's out there if you're gonna do that. That'd be my suggestion.
I concur, I agree.
I
Okay.
think you ought to ask the question at the end of every year, but I don't see any
Yeah.
reason, I mean, they seem to be competent, they seem to, you know, they seem to do a good job. Quality of the audit seems to be pretty darn good. I don't know in terms of expense, kind of what.
They're all in the same ballpark. I mean, this wasn't the cheapest, my understanding, there was one that was cheaper last, or
Yeah.
whenever this came out.
Yeah.
But,
Yeah, yeah. That would be my,
Automatically.
that would be my suggestion, is to stick with them for another year and then fulfill that commitment. And then go out. next
Plan to
year.
go out to bid
Yeah,
next year at this time.
Yeah, see what's out there.
Okay,
I think that's just good governance to do that every once in a while.
okay. Everybody on board, do it by consensus? Okay.
To do what, I'm sorry?
Stay with this auditor, not go out to bid.
It's a recommendation.
For the next year.
That's
We
our
need a
recommendation.
motion.
Which really, I think Heather gets us to the next point, or somewhere on here. What's the agenda topic looking like for, is it the audit? I mean, for the meeting on the 19th.
Yeah, the Board of Commissioner one is just Elsa's presentation, because you guys already did your recommendation last month.
Right,
Yeah, so
so,
it's just on there as a presentation by Elsa.
okay. I mean, do we want to, I mean, I don't think we need another agenda topic. Do we want to add anything?
You already
to
did
that?
it.
Yeah.
Yeah.
Yeah, I mean, you guys already, you're good with that. I mean, if you wanted to make an agenda topic, or if you just said it during your comments, even that just said that the committee came to a consensus to recommend keeping the auditor for the next
Okay.
upcoming audit.
Okay, so that agenda topic, is that Daniel's, is it our, you know, who's the?
It's Daniel.
It's Daniel's?
Yeah.
Okay.
Yeah.
So, he would introduce it, kick it off.
Mhm.
I mean, it'd be good to be able to make a statement that we decided not to, you know, we're gonna stay with this auditor. I mean, it seems like it's relevant to that topic.
If you want to give me a memo, we could include it under that same item. I mean, it is all, if you want to have one from the board, or if you want to just have another separate item that says recommendation is, you know, however you want to do it.
I don't think it's worthy of an agenda item itself.
You've got
It's
three
just,
guest speakers, so you don't
yeah,
want
so
to.
I would think that, I don't know, if we should co-sponsor the topic or just
I
not.
think you just tell them in the comments.
Yeah.
Yeah, and there'll be an opportunity, because even though it's a third of 3-year contracts,
You have
that
to approve
contractor
it.
will still be, that contract will still be in front of the board at a not too far out time.
Yeah, yeah.
For their approval.
So that probably would be the appropriate, he's right, that'd probably be the appropriate time for the audit committee to say, we've discussed it and our recommendation is to move forward with the contract.
Okay,
Perfect.
okay. Okay, I think that's it.
I move we adjourn.
Second.
All in favor?
Aye.
Okay, adjourn, thank you.
Day for Fridays.